How about bringing the traditional market makers into this new world? Because they come with a lot of capital and huge amounts of experience and risk management skills. Just, getting people of the scale of Virtue and Citadel and all of those guys to be more active participants in this overall new market, it'll make a massive difference.
There's a shift happening right now that most people are completely underestimating, and it's not just about crypto anymore. It's about who is entering the system, because for years this market has been driven by retail speculation, native crypto funds, and early adopters. But what Raoul Pal is pointing to here is something much bigger. The moment traditional financial giants step onto blockchain rails in a serious way, everything changes. We're talking about firms with trillions in capital, decades of risk management experience, and deep influence over global markets. The kind of players who don't chase trends, they define them. And now, for the first time, they're not just watching crypto, they're positioning themselves inside it. This isn't theory anymore, it's already happening. Look at what's unfolding in real time. Institutions like Morgan Stanley are opening access to Bitcoin ETFs for their clients. Wall Street giants are moving from skepticism to participation. Market makers, hedge funds, and liquidity providers are quietly preparing to operate on-chain. This is exactly the transition Pal has been waiting for, the bridge between traditional finance and crypto finally being built. And if that bridge holds, the implications are massive. Because crypto doesn't just grow incrementally from here, it expands exponentially as global capital begins to flow through entirely new rails. So before we break this all down, take a second to like the video, subscribe to the channel, and drop a comment below. Are institutions early or already late to this cycle? Let's get into it.
When I was like first going to Bitcoin in 2013, and I think I wrote a paper like in 2015, before I even knew about smart contracts. And I said, the obvious thing is the entire financial industry is going to go into blockchain rails because of a number of things. Obviously, it's cheaper and everything else. The other is the trust layer of when somebody goes bust on blockchain, it's immutable. You kind of know who owns what asset. And we have so much issue with collateral where the collateral's this big and the amount of rehypothecation and lending is that big that when somebody goes bust, like Lehman Brothers, you suddenly realize that nobody's got any of the collateral that they thought they had, right? And so I looked at this for a long period and I thought, well, blockchain sells 90% of this. And the big one for me that it's still surprising nobody's gone after fully is when you think of a smart contract, where is the greatest example of smart contract use? It's OTC derivatives. It's a multi-quadrillion-dollar marketplace, of which when I was at Goldman and other firms, there would be boxes of ISDA docs, of which nobody knew what was in them because the industry was growing too fast.
Everyone had different conditions and, an amendment A and yeah.
And then nobody knows what happens if something goes wrong. They literally can't because nobody knows what's in what is the docs. And that came out of Lehman too. And yes, some of that's gone on exchange now, but it's so obviously a smart contract where it just instantly settles. I just don't know why that hasn't happened yet.
I think the stablecoin issue is a real issue. And I'm empathetic to this view of like, wait, why are the stablecoins are fully reserved and they're federally regulated. Why can't I pay yield? They're fully reserved. So we'll see. Feels like a fairly important issue, and I'm not sure it just goes away, but it may. There may be a reasonable compromise. We can live in either world, but just on behalf of our stablecoin customers, I'm kind of empathetic with that view. Number one. Number two, honestly, Raoul, maybe you're a better place than I am on this. I'm not sure how the DeFi conversation ends up. That has yet to be resolved. So in other words, we're going to put in place this whole rubric about regulating exchanges and brokers in crypto and what's a crypto commodity and what's a crypto security. We're going to have this whole law and we're going to say you can do this and you need a papal blessing for that and you need a different type of blessing for this other thing, unless you call yourself DeFi.
Yeah, and then you can do what you want.
In which case you don't have any of that. Obviously, that's not sustainable. So then you have to get into, well, okay, what is DeFi? Maybe we can all agree that Uniswap's main protocol is indeed decentralized. what about all the other applications? What about the ones where the guy who wrote it just can publish new code? What about the one where the guy who wrote it owns 80%? What about the one where the guy who wrote it is the biggest trader on it and has access to the code? What are those DeFi? What is DeFi? And I don't yet know what the zone of agreement is on that, or if the answer will be, let's just punt it and let's punt it to the regulators and they can figure it out for a year and a year and a half.
And the issue is there's too many smart people moving too fast for the regulators to actually deal with anyway. It's like trying to regulate AI. It's literally impossible.
Yeah.
Because it's moving too fast. However, if you think of the density of intellectual capital, because this is around capital markets, it attracts a lot of people. The moment you regulate this way, somebody finds a new answer that way.
Yeah.
I mean, it's almost impossible to deal with.
Well,
that was the point, I guess, of crypto in the first place.
Well, yeah, and with DeFi, you can simply say, hey, look, you can do whatever you want outside the U.S., but you can't have access to the U.S., right? That's one answer. So then that raises a question, but we know people just easily download a VPN and they evade it going on a VPN, but maybe we're okay with that. And in fact, I think we probably are. So it's not incumbent upon the DeFi protocol to make sure that people aren't lying and using a VPN login. I think that's all fine. But if you say, hey, you can do whatever you want outside the US, but if you want to come in the US, then you have to do full KYC AML, then it begs the question, okay, cool, but the person who I've KYC'd AML'd in the US, can they interact with the non-KYC AML ex-US person? I think if the answer to that is cool, I still am not 100% sure what the path is for DeFi in the future, because I think the way DeFi gets super duper exciting to me is institutions feel comfortable using DeFi. And I'm not sure it gets there with that pattern. So I'm hoping that there is a definition that comes out, hey, this counts as DeFi. It's perfectly okay to use that within the United States. And then over time, I think innovation could go up like that. I don't know. Is that a bit of gobbledygook to you, or did you follow what I was saying?
No, your answer is right. We don't know. My general view is if there's money and it can be solved by technology, people will find a solution. And whether that's using some sort of passport, ID that allows you to operate within spaces, stuff like that. I think we have to go towards that anyway. We need some sort of ID system anyway because of AI. And we're going to need it for some of these kind of things because, some countries want to regulate more than others. And, capital is freer in other countries than others. And it's just the way of the world. And you don't want to go and fight every single nation state for their regulatory terms. So, I think it's like all of the above. I think that's the sort of lazy answer, but usually works is like,
yeah.
What Pal lays out in that first segment is the core of the thesis. Blockchain isn't just an alternative system, it's a superior one. Cheaper, faster, and most importantly, transparent. The traditional financial system runs on layers of trust, paperwork, and opaque agreements. Crypto replaces that with code. And nowhere is that more obvious than in markets like derivatives, where trillions, if not quadrillions, of dollars are tied up in contracts that, historically, even insiders struggled to fully track or verify. Now layer that with what's happening today: stablecoin regulation debates, uncertainty around DeFi, and governments trying to catch up to innovation that's moving faster than they can control. But here's the key point. This friction isn't slowing the space down. It's accelerating the need for solutions. Because when there's money on the table and technology can solve the problem, the market finds a way. And that's exactly where this story starts to get explosive.
So what else are you most excited about next 18 months? What thing now is like, okay, I can feel this, I can taste it, I'm getting excited?
I think we've hit on it. I'd just be repeating myself. It would not shock me.
Let me give you another one then. I think the TAM of crypto has just gone to infinity. Because before there's like X billion people, there's X amount of capital. I just think this agentic thing is bigger than people understand. I think it's the destruction and rebuilding of the entire asset management industry from scratch.
Well, yes, I would add to that. I agree. I would add to that. And it's happening at the same time as tokenization of major global asset classes. So you put those two together. And I've said this publicly and privately that up to now, crypto's really been a hobby. It's small. It's tiny. What's the aggregate market cap of crypto right now? I haven't looked at a while.
2.7 billion or something, a trillion.
Yeah. So it's smaller than a couple listed companies. It's a hobby, and you're absolutely right. I think those two trends potentially equal in sizing could take this little teeny box of crypto and say, no, the TAM is all of financial markets globally. We do have a debate, though. I'm curious to see what your reaction is to this, Raoul. We have a debate internally. There's a reasonable view by smart people that stablecoins actually will not be the primary way of paying and receiving in agentic finance, and that agentic finance will actually rely on the existing fiat rails or new fiat rails, as opposed to, whipping around stablecoins. Do you have a view on that?
Yeah, I do actually. Generally speaking, you can't reduce the denominator of a dollar down to less than a cent. Right, a lot of these payments are micropayments.
Right.
So that's one.
Yeah.
The other one is the speed required for some of these things is it rules out some of the ecosystems and not others. I think an agent is wildly indifferent whether it's an underlying protocol token or a dollar token, as long as it's faster, efficient, cheaper. But I do get to the stage where, like, if somebody needs to do something in Solana world, Sui world, Ethereum world, an agent is going to end up managing its own treasury. Right. That's an interesting world that nobody's thinking about. But they will rebalance and optimize based on profit maximization, if that's what they're there to do. Okay, that becomes really interesting. I also get to, I'm a very visual person. I think about like a firm like Millennium, right? Gigantic hedge fund firm. What does Millennium actually do? Well, it has a bunch of traders in-house, pods, that in the old world would have been separate hedge funds, but it's not so easy to raise capital now. So they become pods within Millennium. So that's a group of managers who allocate capital. All of that can basically be done on-chain by agents. You've got your relative value bond agent, your equity arbitrage agent, your long-short agent, all of that. That's all coming. So that gets rid of 90% of the costs of Millennium allocating capital. But then you look at the Millennium mothership. What does it do? Well, it does asset allocation, risk management, regulatory compliance, and capital raising. All of that can also disappear via AI. And then you're like, okay, then you can apply it to every asset management business, and you realize, okay, the entire industry is about to go through massive change. Not today, not this week. DeFi, where does it fit in? Obviously, that's how it'll work. And so you get to a world 7-8 years where we're going to be building agentic, gigantic finance operations, of which you and I won't even see. Well, you'll see them because it will be running through the liquidity layer and other stuff. But nobody's even going to see this. It's like an invisible economy, because the front page of the Financial Times is not some hedge fund guy got paid, $500 million this year, because it's an agent. Crypto was the fastest rate of adoption of a new technology ever, and it's dwarfed by AI now.
Yeah.
It's dwarfed. It's Metcalfe's law squared. It's Reed's law. It's the fastest thing we've ever seen. And now agents are building agents, and, it just keeps going. So I don't know how easy it is to disrupt yourself unless you're really brave. Yeah. But I just think, I just go back to our conversation. I just feel like all of that is such a gigantic opportunity because it all has to run on crypto rails. There's no way around it. And whether it's stable coins or underlying tokens, nobody cares as long as you build the infrastructure for this and plan for the future and not the past. I think too many people are focused on building out the past and replicating what you already built, New York Stock Exchange, or what ICE have built 10 years ago.
Yes.
But that is not the answer. The answer is, where do they need to be in 10 years' time? You need to plant that flag. It's not easy, but it has to be done, because if not, we're going to end up bringing the financial system into new rails, which have been already superseded by technology.
Because what comes next isn't just institutional adoption, it's total transformation. Pal shifts the focus to something even bigger, the combination of AI and crypto. not as separate trends, but as one unified system. Agentic AI managing capital, executing trades, optimizing portfolios, all on-chain. No middlemen, no delays. Just autonomous financial systems operating at machine speed. And when you really think about it, this breaks the entire structure of modern finance. Hedge funds, asset managers, trading desks, industries built on layers of human decision-making and cost structures that AI can compress or eliminate entirely. What used to take entire firms can now be done by coordinated networks of intelligent agents. Quietly, efficiently, invisibly. This is where the total addressable market for crypto stops being crypto and becomes everything. Every asset class, every transaction, every market, tokenized, automated, and optimized. And that's why Pal makes it clear, what we've seen so far isn't the peak. It's barely the beginning. The real expansion starts when these systems fully connect, and we are getting dangerously close to that point. So the question isn't whether this space grows, it's who's positioned before it does. If you found value in this, make sure you like the video, subscribe for more deep dive breakdowns like this, and share your thoughts below, because this next phase of the cycle could move faster than anything we've seen before. Thanks for watching, and I'll see you in the next one.